All right, so this is a special post at the request of some people in the Leo Finance Discord, talking about how with Aave you can actually have positive funding rates on both the borrow and the lending, or on the deposit and the borrow side, and you can pyramid that up if you want to and do a whole stablecoin thing. So this is aave.com or app.aave.com. This is the deposit dashboard. So you can see here, you can deposit stablecoins, and the APY that you get has two parts. So this Aave has different markets. This one's the Ethereum mainnet, and on DAI you get at the moment 2.93% of in-kind interest, and you also get 2.03% APR in terms of the staked Aave token. So GUSD, a little bit juicier, a lot juicier actually, 2.72 and 7.27, and USDT at 2.48 and 6.23. USDC a little bit lower, 2.35, 2.1. So USDC and DAI running about 4.5%, 5%, and GUSD and USDT are running at about 10%. So yeah, you can just deposit, earn 10%, and you're good, right? But if you want to take it to the next level, then you can start to borrow at positive rates and pyramid the whole thing. So first, let's make a spreadsheet, because they called me McSpreadsheet for a reason. So let's say we are depositing. Let's do GUSD, because that looks the best at the moment. Okay, so deposit. So let's say we take 10,000, and then we are making, let's see, what was it, APY? 272 and 727. 2.72 and 7.27. Let's see, interest, APY, and rewards, APY. So rewards are, claimable. Interest just builds into the position automatically. So, daily or hourly or however on, you can go in and claim your rewards and then do what you want with them. So those are annual numbers. So daily is going to be, let's see, that plus that divided by 365. So 0.027% a day, and then daily yield is that divided by 100 times that. So not a whole lot, right? $2, $2.73 on 10,000. Okay, so that's part one. Then we go over to the borrow. So borrow, we're also going to look at stable coins, and you can see that the APYs, I mean, you can get a fixed interest rate, which you're paying, much higher rates, or you can get a variable rate, you can pay lower rates, and you're also getting rewards, as you can see here. So let's keep it in GUSD, because one, that has attractive rates, and two, it just makes things simpler because it's cuts out a step. So let's see, borrow GUSD, right? And let's see, interest paid APY, rewards APY. So interest paid is 3.88, and rewards are 9.42. Okay. So remember, interest paid is increasing the amount you owe. So that's a negative carry cost, but the rewards are positive. So the rewards outweigh the interest owed, and so you end up with positive funds of 6% or so. So if you deposit 10,000, you can't borrow 10,000, because there are loan to value limits. So if you go back to deposit, the GTV, can't use this as collateral. Damn. All right, so we're going to go back and we're going to use, can we use USDT? No, this is an important point. USDC. Okay, so here, so we can't use GUSD as a deposit, because we need to be able to use it as collateral for this whole thing to work. So we're not going to get quite as much juice out of this as I thought. 235 and 2.1. Okay. So now our daily yield is much lower because our rewards are much lower. So now we can go over to borrow. So we can use collateral. We can use the USDC we've deposited as collateral to borrow the GUSD. So GUSD is Gemini, right? So this is depositing a stable coin, borrowing a stable coin. There's not going to be a whole lot of fluctuation there unless we have a depegging of one of the coins. In that case, the whole thing blows up. So that's a risk factor. But as long as the US dollar coins, USDC, GUSD, USDT, DAI, all those maintain their peg, within, a cent or so, then, you can do this, because with aave, you have to keep a loan to value below a certain ratio. So on USDC here, it tells you that your maximum LTV is 80% and your liquidation threshold is 85%. So if you deposit 10,000, you can borrow out 8,000 of it. That's 80%. And if the borrowed value raises to 8,500, which is 85% of the 10,000, then you get liquidated, and the position unwinds, get charged a penalty, you lose a bunch of money. So that's a risk when you have volatile assets. But when you have stablecoin and stablecoin, it's not such a risk. So, but let's say we take 75%, right? So we're going to take 0.75, that amount. Okay. So now we're borrowing 7,500 GUSD. We're paying 3.88% on that 7,500, and we're receiving 9.42% in terms of the aave staked rewards on that 7,500. So let's look at the daily here. So we're going to have the negative of this plus that divided by 365. So we're earning 0.015 on the borrow, and we're paying, or sorry, we're earning 0.012 on the deposit. We're earning 0.015 on the borrow. So daily yield is this times that divided by 100. Okay, so not a huge amount, but we're doing okay. So remember, this whole thing is going to be on $10,000 of original investment. Okay, so now what's happened? We had 10,000 USDC, put it on deposit with aave. Now we borrowed out 7,500 of the GUSD, and so now what? Right? It's just sitting there. Well, we can take that GUSD and we can swap it for USDC, and then we can put that USDC back on deposit with aave. So, and this is how the pyramid begins. So let's say new borrowings. And in this case, it's just that. So now what we're going to do is we're going to deposit that new borrowing back into aave. And yes, you're going to pay a little bit of commission, trading fees and stuff when you do the swap, but we're going to ignore that for purposes here. Rewards are all the same. So that's the same daily yield. We went from 1.2 up to 2.1 now. And now we can borrow up to 75% of the 17,500. So now we've already borrowed 7,500. So let's see, we can say that we can go up to 13,125, right? And now we're earning $1.99 on the 13,125. So the new borrowing, though, is the difference between the previous round and this round. So now we're taking, our first borrowing was 7,500. We increase that size by 56.25. So now we take that 56.25, go back and deposit it into aave. And we just repeat. So now we're up to 23,000 on deposit, 17,000 on the borrow, and we're going to, so we increased our borrowing by $4,200, and we're earning 263 there. And we go again, and we go again, and obviously there's a diminishing return here because you're only getting a 75% fraction of the new deposit. It's not perfect recycling. So this won't go on forever, but you can go on for a while. Let's see how many rounds we can get out of this. And call it 500 right there. Okay. So let's do that. That is 10 rounds of this cycle. And now we're earning 429 of yield on the borrowing, and we're earning 460 on the deposits. So what is that total, right? So that total is the sum of those two things. So that's 889 a day in both USDC position increasing and in staked aave rewards. And then you can unstake those rewards and sell them or whatever. You can just continue to compound whatever you want to do. So now what is that? How much are you earning? Because remember, this whole thing started with just 10,000 USDC. So that's the capital base that we are using in order to achieve this $8.89. Let's round it off and say 90 cents a day. So if we annualize that for an APR times 365 and then divided by the original capital, so we're at 32%. That's not terrible for very low capital risk. What is at risk though is that the value of the aave rewards, so this rewards APY, will vary with the price of the aave token. So that's going to go up and down. And the interest that we're paying here is variable. And in some coins you'll see it move a lot more. So USDT, sometimes like within a day, it can be like 2% borrowing interest cost, and then it can spike up to 15%. I've seen that quite a bit over the last few days, especially with all this market volatility. So you have to watch that, and that will change the math on everything. But in terms of capital risk, where the whole thing, is your $10,000 at risk? It's relatively low. And you can play with the percentages. You can say, well, instead of 75%, we're going to go more conservative. Let's go 60%. And now we're earning 19% on our original capital base. And whether it's 10,000 or 100,000, I mean, the percentages remain the same, which is okay. So this is how the aave pyramid works. And there are tweaks you can do. Gerber and was mentioning that you can put things into Curve. Curve has a staked aave pool, and you can earn staked aave, on top of your Curve rewards, and then compound the thing over that way. There's a million different flavors to this whole thing, but this is the basic idea of using leveraged capital in stablecoins in order to achieve a pretty attractive returns. If you're doing straight up DeFi yield farming, then your percentage returns can be higher, or probably will be higher, but you have a lot more volatility in terms of the tokens that you are dealing with. So everything's a balancing game. How much volatility do you want to accept for the rewards, and how much management do you want to do? So these are all questions that only you can answer, and you have to consider when constructing your own portfolio. So this is a strategy that personally I don't use very much. I might do like a round or two with some extra funds, but it's not a whole pyramid that I build up to this diminishing returns point. So just FYI, for your information. The other thing I want to point out is aave has multiple markets. I've been using the Polygon markets, and the rates are different. So if you want to look at stable coins here, you can see that USDC is lower on the APY deposits, but higher on the rewards. And here you're getting rewarded in Matic, which is the gas token of the Polygon network. On the borrow side, again, rates are different. So here, GUSD found an option. You can get positive rates on all of these. Right now, USDT is the juiciest, and it's the most volatile. So just to tell you that from experience. So if you want something less volatile, you would deposit USDC, borrow USD, and then just run it back through. But if you want to go a little bit more aggressive, you would deposit USDC, borrow USDT, swap for USDC, redeposit. But the general structure works the same. So interesting stuff that's possible in the world of DeFi.